Today, we're diving into Lovesac's latest earnings report. And honestly, it tells a really fascinating story. We're talking about a company making this huge bet on growth at a time when its entire industry is actually shrinking.
And yeah, that really gets to the heart of the puzzle here. The whole furniture industry, the home furnishings category, it's having a really tough time. So you gotta ask, how on earth is one company managing to not just survive, but actually grow? Let's dig in.
Okay, so first, let's just set the scene. This past year for the furniture industry has been, well, to put it mildly, it's been rough. I mean, think about it. After the pandemic, we're all spending less on our homes and way more on going out, on travel, on experiences, and that creates this massive headwind for anyone trying to sell you a couch.
And this number, well, it kind of says it all. For the entire fiscal year, the whole home furnishings market actually shrank by 3.4%. That is the tide that every single company in this business was swimming against. But this is why the Lovesac story is so interesting. While that whole market was down over 3%, Lovesac, they grew by 2.4%. Now look, that might not sound like some explosive number, but you have to understand, in a shrinking market, any growth at all means you are literally taking business away from your competitors. You're stealing market share.
Okay, so we've established they're growing, which is huge, but what does that actually mean for the bottom line? Let's pull up their financial scorecard and see what's really going on.
And right away, you can see it's kind of a mixed bag. Sales, yeah, they're up, which, as we just saw, is a huge win. But their profit, that's under a lot of pressure. So this is not some simple, straightforward success story.
Let's get into the actual numbers here. For the whole year, their total revenue was almost $700 million. I mean, that's a big number. But their net income, the money they actually get to keep, was just $4.1 million. To put that in perspective, that's a profit margin of less than 1%. I mean, it's positive, sure, but it is razor thin.
So that's the big question, right? If they're selling more stuff, why did their actual profit get squeezed down to almost nothing?
Well, the answer really comes down to something called gross margin. And all that means really is the amount of profit a company makes on each thing it sells, before you even factor in stuff like marketing or paying rent. It's a really important number because it tells you how healthy the core business actually is.
And Lovesac's gross margin got absolutely hammered by a couple of things they just couldn't fully control. We're talking about higher tariffs on goods they bring in and shipping costs that just went through the roof. Those two things alone took a huge bite out of the profit on every single couch they sold.
But here's the real kicker to their whole financial story. Even with all that pressure on their profits, Lovesac finished the year in an unbelievably strong position. They've got a record amount of cash on hand, over $100 million, and this is the really critical part, they have zero debt. In an economy like this, having that much cash and no debt, that gives you a ton of freedom to invest and keep growing.
So how did they pull it off? How do you grow sales and keep your finances that solid in this kind of market? Let's dive into their playbook. They call it their acquisition engine, and it's basically a three-step process. First, you've got smart, modern marketing to find new people. Second, you use a mix of physical stores and a great website to sell to them wherever they want to shop. And third, and this is key, you focus on making sure that first purchase isn't the last one. You build a real relationship.
You know, the company's president, Mary Fox, made this really interesting comparison. She said they think of themselves as being closer to Apple than to a typical furniture company. And you might think, what? But it makes sense. The idea is you're not just buying a couch, you're buying into a platform, their sectional sofa, that's designed for you to add to it and change it over time. Kind of like buying an iPhone and then adding apps and accessories.
And this whole platform idea, it's all about one thing, maximizing what's known as lifetime value, or LTV. It's just a fancy way of saying how much money can we make from one customer over their entire relationship with us. And the numbers don't lie. This whole model is actually working. Get this, within 5 years, the average Lovesac customer is worth 1.7 times the profit they made from that very first sale. That's the proof right there. People aren't just buying one thing and leaving. They're coming back for more pieces, new covers, all sorts of accessories for that platform they bought into.
So what are they actually doing to make this happen? Well, they're firing on all cylinders. They've shifted to a digital-first marketing strategy, and it's working. Online sales are up. They're rolling out new products, like their Snug platform, to attract even more people. To fight back against those tariffs we talked about, they're actually starting to make stuff here in America. And they're even upgrading their delivery services to make the whole experience better.
And you can see how well this multi-channel approach is working just by looking at where their sales came from in the fourth quarter. Yeah, the physical showrooms are still the biggest piece of the pie, but their website is pulling in almost a third of all their business. It's a really balanced attack, hitting customers both online and in the real world.
So all of this, navigating this brutal market, fine-tuning their strategy, it's all building towards something much, much bigger. Let's talk about their vision for the future. And the vision honestly couldn't be more clear. The CEO, Sean Nelson, he's not just trying to build a successful furniture company. His goal, he says, is to become the most loved home brand in America. Full stop. I mean, that is a seriously high bar to set, but it's the guiding light for everything they do.
So how do you even get there? Well, the strategy is all about a massive shift in what the company even is. They have to go from being that company that makes the cool modular sofas to being a genuine lifestyle brand. That means new products on new platforms and, this is the big one, products for different rooms in the house.
And this isn't just talk. They have an actual roadmap. So this year, they're dropping new platforms to double down on the living room. Then this summer, that Made in America production officially kicks off. And then, here's the really big move. In 2027, they're planning to launch into a completely new room of the house with a whole new set of products. And that, really, is the big question hanging over everything. Lovesac is betting the farm on making this huge leap from being a product company to a full-blown lifestyle brand. They've built this incredible, loyal following in the living room for sure. But the ultimate test, the billion-dollar question, is will those customers follow them into a totally new room?